Welcome to my final InvestEngine portfolio update for 2022. Now this year has been a completely crazy ride in the stock market. It's put a lot of investors out of the market. Investing has been very easy. You could just put your money into any stocks and pretty much everyone was an expert. But if the past few months have shown, nobody is an expert and picking stocks can be a dangerous game. And that is why InvestEngine allow you to invest very easily with very low fees into ETFs. Now just for full transparency, I am an affiliate member of InvestEngine, but this is still my own money that I am investing in my own way. And of course, the goal for all of my portfolios is to make as much money as possible. If you'd like to sign up to InvestEngine for free, you can use the link in the description down below. So without further ado, let's get straight into the portfolio. So when I log into my InvestEngine app, there are a few changes, or there is at least one big change that is visible straight away. And that is that they finally added a card that has cash. So this is your general cash. Currently I only have 17 pence, but when I top up my account I can put it into cash and I can quickly and easily move cash between these different cards. For example, if I wanted to put some more money into my managed by InvestEngine account, I can do that, or any of my other accounts. That is very much a welcome addition because I really feel like InvestEngine was missing this, because it was kind of a hassle to move cash between the different cards. And also if you had a bit of extra cash, what would happen is it would just accumulate within these cards and it was hard to move the money around. And overall I thought it just added more steps to get into investing and it made it more complicated compared to some other providers. But anyway, InvestEngine always listens. It seems like every month that I am doing these updates there is another additional thing they've added or made it simpler. So I'm all for that and I'm glad that they're listening to the community. So if you didn't know, InvestEngine is different from other investment providers because they only deal in ETFs, which I'm very favorable for, because as a beginner investor you are more safe in investing in ETFs, because as you probably know from my experience, because I've documented it before, I've lost a lot of money with dealing with individual stocks. Especially when you're a beginner, it feels like you can just pick whatever and it goes up, but of course in the long term it doesn't do that. So that being said, let's get into our next card, which I called YouTube ETF, but you can call it whatever you want. And that is a collection of two ETFs. So that's the S&P 500 by Vanguard, so that's the VUSA, and then there's the FTSE Japan, which is the VJPN by also Vanguard. Over the past month, the portfolio has definitely suffered a loss because of the current economic climate. That being said, at the beginning of December things were looking good, everything went up, and it was only literally 2 days ago where the stock market plummeted. And this was funny because the US CPI numbers and also the UK inflation data came back lower than expected, and that led to, a quick rise in the stock market and then another plummet. So I am not a financial advisor or any sort of thing like that, but my guess is the fact that we are expecting inflation to kind of for sure peak soon, and people are just waiting for the bottoming of the stock market, which is never going to happen in the way that people think it is. Therefore, some people are going to lose out on a lot of money. But my guess is there's going to be sudden, huge rise in, some of these stocks that is not going to go down anytime soon. And that's going to come, who knows when, maybe February, something like that. So don't take this for any sort of advice. It's just a wild, random guess. But of course, we've seen that the stock market over the past month has gone up, down, up, down, up, down. So individually, we can also see the movement of prices. So if you go past month, you can see it quite accurately reflected like this. But that's because most of what I'm holding right now, actually not even most, so half of it is S&P 500 and half is FTSE Japan. And this portfolio graph here represents both of them as an average. So we can see what's happening to the FTSE Japan, and it's almost exactly the same. All these ETFs are moving in exactly the same direction. That is another reason why I think ETFs is a good investment strategy, because the market really does move overall in the same direction, regardless of the kind of sectors they're in. The S&P 500 is very different from the FTSE Japan. There might be slight overlaps, but essentially ETFs and different sectors, the stock market overall always moves in the same direction, and there will be some outliers, and that is where people are trying to make their money. They're looking at the outliers, such as Tesla a few years ago, where it went up 3,200%. These outliers move the averages, but also these outliers, if you invest into them, you can make a lot of money. I am not for that type of risk. No one has any idea how these companies or when these companies are going to go up. So I'd rather get the average return every year than get a high return one year and then negative for a few years later. So next we have the S&P 500, which is another portfolio that I have. And just to show you, it is very easy to make a portfolio. All you do is press add new portfolio. You can press create DIY portfolio. I don't have my ISA with InvestEngine, but you can press general account, and then you can add whatever ETF you want, and then you create the portfolio. I'm going to cancel now because I have recently created a new portfolio, which I'll show you. So the S&P 500 is the S&P 500 Vanguard again, but this time one of my favorite ETFs, which is the Vanguard Germany All Cap, and that is actually up by 8%. So the S&P 500 on this portfolio is down by 6%. Again, I'm not 100% trusting these numbers right now. That one seems fine, but yeah, the movement over the past month looks exactly the same as the other one, of course, because it's the same ETF. But the FTSE DAX, or the Vanguard German All Cap, also has this movement here where it went up and then down. The low was lower than the previous low. And finally, I made a new portfolio called the GSPX, and my investment strategy going forward is to only invest into this ETF here, which is my new favorite. Essentially, it is the S&P 500, but it's hedged against currency changes, so it reflects almost exactly the same as the original Standard & Poor's 500 index from America, because we see if we go into the Vanguard one, we actually buy this in pounds, and of course, due to the pound-dollar exchange, the returns that we've been getting are very different from what Americans are getting. As you can see, up, down, up, down, up, down, but overall it's very steady. If we go into the GSPX, we can see that it's not the same. It's a steady decline over the past year. And so I've been investing more in my main portfolio into the iShares S&P 500, so the GSPX, because the price movements are more favorable for me, because you can see it's a steady decline, and I've been looking at this every single day, and I feel like due to the currency changes right now between the pound and the dollar, some of the gains that you might be making on the S&P 500 can be wiped out if the pound becomes stronger, and vice versa. So I just want to invest in the actual American stock market properly, like how they are seeing their economy. That being said, it is slightly more expensive than the Vanguard S&P 500 because it has a slightly higher total expense ratio. It's round about double the expense, but I think it's worth it because the volatility that I'm seeing right now in the GSPX is just amazing, and I think there are some opportunities to make money and buy when it's lower. Conversely, with the VUSA, the American stock market might be going lower, but it might be opposite for the UK market. And I just want to be on top of buying at the price that I think I'm going to be the most happy at. So going forward, my InvestEngine account is going to be more heavily based on the GSPX. But of course, if I ever wanted to change my mind, which I always do, I can easily add a new portfolio and change around the ETFs that I have within it. I wish you guys a very happy Christmas. Make sure to check out some of my other videos, and I will see you in the next video.